Hey guys, what is up? I hope you're having an amazing day today. We are talking about a company that is on its way becoming public sometime this month. This company is Root Incorporated, a digital auto insurance company, and they will be trading under the symbol ROOT in the NASDAQ Exchange. I recently did some research on this company, and in my opinion, I think there's a lot of upside potential, and they could also be a huge disruptor in their industry because of the fact of how they operate and how their service differs from other competition. Also, real quick, you guys, remember I'm not a financial advisor. I'm not telling you where and how to invest your money. You're responsible for doing your own due diligence and research with any company or stock. Now, there's no time to waste, so let's get right into the video. Root has announced that it will sell a total of 24.60 million shares of its fledgling stock at $22 to $25 per share. The company will sell off a solid 22 million of those shares, while a primary shareholder will sell the remaining 2.16 million. Root could raise up to 695 million, which is way higher than earlier estimates of a $100 million IPO. Root is based in Columbus, Ohio, and is a parent company of Root Insurance. The upcoming IPO values the parent company at around $5.5 billion to $6.2 billion. Root has received at least $560 million from investors including Drive Capital, Ribbit Capital, Tiger Global, SVB Financial Group, and Redpoint Ventures. The way this company works is just like every other auto insurance company out there, but the thing that sets them apart differently is that they have the capability to track how a person drives to capture that driver's behavior on the road, such as braking, speed of turns, driving times, and route consistency, and determines who is a safe driver and who isn't. And this is called usage-based car insurance, also known as pay-as-you-drive and pay-how-you-drive, and mile-based auto insurance is a type of vehicle insurance whereby the costs are dependent upon type of vehicle used, measured against time, distance, behavior, and place. The setup process is all done through their mobile app. You download the app, they test your driving behavior, then you choose a recommended plan, or you can create your own. Also, not to mention, with using Root, you will receive these pretty nice perks. Save up to $900 a year, file a claim in about 3 minutes, easily manage your policy in the Root app, earn cash offers for referring friends, free Lyft credits on select holidays, and roadside assistance included in every policy. Also, Root claims they do not insure bad drivers, they only insure good drivers because of the fact that 30% of drivers cause nearly 45% of all accident costs. We don't think good drivers should have to pay for other people's bad driving, so we don't insure bad drivers. That means good drivers save. And if you are wondering where Root is available throughout the US, they are available in these select states colored in dark orange, and they will be available in the light colored orange states real soon. Root has different coverages that they offer, such as liability coverage, which includes bodily injury and property damage. Second is car coverage, such as roadside assistance, collision, comprehensive, rental, and uninsured motorist property damage. And then you have medical coverage, such as personal injury protection, medical payments, uninsured and underinsured motorist bodily injury. And remember, this does depend on which state you live in and the required coverages in that state. Okay guys, now there's a few cool things that I want to mention that Root also offers. Their roadside assistance is included in Root policies at no additional charge. While most insurers offer roadside assistance for a monthly or per use fee, Root covers up to 3 incidents per 6-month policy term, up to $100 per incident. Another thing is their rideshare option for rental coverage. Most auto insurers offer rental reimbursement coverage, which pays for a rental while your car is in the shop due to a covered wreck. Root has the same coverage but is a little more flexible, allowing customers to instead be reimbursed for rides from Lyft. With each claim, the option is the customer's, but Root says it can help you decide. Also, one last really cool thing is Root's auto insurance discounts. Because of Root's unusual pricing model, it doesn't need to offer many discounts to keep prices low. However, it does offer up to 10% discount for drivers who don't use their phones on the road, a discount for Tesla drivers who use auto steer or automated steering. Let's take a glance at Root's income statement. We can see their revenue has increased to $245 million in June 2020 from $104 million of last June. Their top 2 factors from this is their premiums they earn and their fee income. Root's net premium earnings increased to $233 million in June 2020 from $99 million in June 2019. And their fee income, which was $4 million in June 2019, jumped to $9 million in June 2020. I expect these numbers to strongly grow as their direct written premiums are seeing a rise. In 2018, it was at $106 million, and as of June 2020, rose to $570 million. And the renewal percentage of total direct earned premiums is growing at a great rate as well. 2018, it was at 19%, Then now, jump to 2020 of June, it has risen to 47%, and this is certainly very good. Root's total operating expenses were $198 million, then increased to $376 million June 2020. And one factor I want to look at that contributes to these expenses is their sales and marketing. As we can see, the firm obtains more than 75% of its customers direct via online digital marketing through Facebook and Google. However, their expenses for sales and marketing has dropped each year as management believes that over time, more of its business will naturally mature as renewal premiums outweigh new premiums, driving profitability. Now onto Root's gross margin. It has greatly improved the past few years. It saw a dramatic increase from 2019 of negative 10.75% to a nice gross margin of 7.42% in June 2020. Now for their balance sheet, as of June 2020, Root has $706 million in total assets and $633 million in total liabilities. The opportunity in Root is definitely present. First of all, the revenue growth is very, very strong, and I believe it will stay strong because the global auto insurance market is blowing up. According to a 2020 market research report by Allied Market Research, the global auto insurance market was an estimated $739 billion in 2019 and is expected to reach more than $1 trillion by 2027. This represents a forecast of a compound annual growth rate of 8.5% from 2020 to 2027. Also, people do need auto insurance as it's a necessity. As the insurance industry is highly regulated and capital intensive, startups can find it difficult to scale, but still auto insurance is one of the first type of insurance that is purchased by an individual, being legally mandated. And to quickly add, people are always seeking for low rates, and this is where Root comes in. Revenue of global insurtech market was valued at $5.48 billion last year and is anticipated to grow to $10.14 billion by the year 2025, growing at a compound annual growth rate of 10.8% between those years in the serviceable market. The total addressable market for the personal line of insurance is a huge $370 billion. Well, that is it for today's video, you guys. I hope you all enjoyed this breakdown and analysis of the Root IPO. I hope you got some valuable information, and tell me down in the comments what you are going to do with this company once it is listed. Please don't forget to like and subscribe to my channel. Also, make sure to hit that bell button for notifications every time I post a new video. Thank you so much, guys, and I will see you all next video. Peace.